Market Prospects, delivering timely information and education to prairie farmers for over 30 years. Market Prospects is brought to you by the University of Saskatchewan's Department of Agricultural and Resource Economics and these sponsors. Log on to marketprospects.usask.ca to view past programs and for information on upcoming programs.
This week, we're again fortunate to have Dr. Robert Johansson, Chief Economist with the United States Department of Agriculture, as our guest for Market Prospects. This time we focus on the grain and oilseed outlook. Welcome, Dr. Johansson.
Well, thanks very much for having me.
Last, you provided an overview of the current and expected global supply, demand, and prices for grains and oilseeds. How are current prices and stocks of these crops and expectations for next year affecting the U.S. farm sector?
Well, I think you need to start with a discussion of prices and stocks this year by noting we had record yields globally, record production for the three major crops, wheat, corn, and soybeans, and that's sort of setting the stage. For wheat, prices have been weak. Global supplies have been growing at record high levels last year. And from a U.S. perspective, competitors have also had large crops, but also have been benefited from the exchange rate comparison to the United States. The strength in the dollar is hampering U.S. competitiveness abroad when it comes to trading wheat and some of the other commodities. When you look at a farmer, at least in the farmer's budget, crop production budget here in the United States, an easy place for producers to make an adjustment is on machinery purchases. And we've seen that occur as sales of large tractors and combines have slowed considerably over the last few years. That continues to persist into 2017. We've also seen land prices and cash rents softening, coming down off the record highs that we had seen over maybe 2 or 3 years ago. But the decline thus far has been somewhat modest, and as always, cash rents are a little sticky to adjust. We expect that to continue into 2017. Again, record yields this year did help soften price declines. So, but looking forward, we would expect yields to return to trend. Prices are remaining flat, so producers are anticipating tight margins in the coming year and are making adjustments to deal with those margins, including deciding how to allocate acreage.
So what is the acreage and current condition of the U.S. winter wheat crop, and what will be the most important factors that determine total production potential for the crop that is in the ground?
Well, the decline in winter wheat seedings this year, down to 32.4 million acres, down 10% from last year, is the lowest since we've seen since 1909, and that's when we started collecting this data. So we've seen wheat come out of production. The decline is in response to low prices for wheat, low expected prices as well due to large domestic and global supplies, as well as the dollar strength, which we've just talked about. The lower winter wheat seedings reported by NASS has pulled up wheat prices a little bit from the lows that we saw a couple months ago, but given global stock levels, a sustained rally looks difficult from our current vantage point. While there was dryness, particularly in the southern hard red wheat belt and seasonal concern with winter kill, spring weather and avoiding a late season frost are likely to be the key determining factors in how the crop finishes. It remains to be seen how spring wheat area may be affected, and that will largely depend on how we see prices evolve over the next few months.
So how do American farmers decide whether to grow corn versus soybeans? And what is expected for acreage allocations between the crops in 2017?
Well, farmers consider many factors, obviously, in deciding their acreage allocation. At the top of the list is prices and prices relative to alternative crops that they could plant. Of course, they also consider risks and rotational factors in determining their final allocations. And I'll mention, of course, that spring weather plays a huge role in what actually gets planted. This year, we've seen a relatively strong soybean to corn price ratio, which favors the planting of soybeans. In our November outlook, we showed a similar outcome with some strength in bean prices in the coming year, while corn prices weakened slightly and had an expectation that corn area would decline in the coming year relative to soybean area. However, given the wheat seedings falling by more than 3 million acres, we may see an additional allocation to corn or to beans depending on the weather and depending on how prices evolve over the next couple months. When it comes to corn and soybeans, those record yields and prices have remained somewhat resilient compared to what they may have been. Of course, some of that has been due to the fact that Brazil had some adverse weather and Argentina last year. But of course, as South American crops come out of the field this year, we'll anticipate that our trade path will remain somewhat sluggish, given the fact that the dollar is strong. The pace of Chinese demand, of course, is a key factor in all of this. Those two factors and their influence on prices in the lead up to planting will influence the final acreage for corn and soybeans. However, as it happens in some years, it is planted weather and the ability to get the crop in the ground that has the final influence over final acreage. The prevented plant acreage, as you know, has been somewhat variable in recent years, and that explains why actual plantings may differ from what farmers say in their planting intention survey.
So what are some expected or potential U.S. federal government policy directions and resulting legislative and regulatory changes in 2017 that could have major impacts on the U.S. agriculture industry?
Well, it's an interesting year, 2017. Of course, we have a new administration, but also we're moving into a farm bill discussion for our next farm bill coming up at the end of 2018 and early going into 2019. But the discussions will start now in the spring of 2017. With the current farm bill due to continue, though, until 2018, there are not likely to be any changes in current federal ag policy until the new Secretary of Agriculture is confirmed. Any new policy directions within USDA remain to be determined, so I don't have any real news for you there. The new administration has signaled some potential actions in the area of trade, regulations, and immigration policies that could also impact the U.S. ag industry. For example, rules not yet in effect by January of 20th of this year have been placed on hold for 60 days pending review by the new administration. Among affected USDA rules are the interim final rule on livestock production contracting, as well as the final rule on organic livestock practices. Both of those are pending review right now. Congressional proposals for legislation on tax policy, particularly related to any border taxes that may be imposed, will also impact agriculture, as would any changes to a state tax policy.
Well, in a recent article, you and some colleagues examined the effects of declining numbers of farmer responses to USDA surveys. What is the importance of these surveys, and what are some potential impacts of declining response rates?
Well, USDA NASS surveys provide crop acreage and yield estimates that underlie a lot of USDA programs, as well as private analyses that affect markets throughout the year and producer decisions and producer information. Producers and other decision makers depend on that information, and as well as the decision support tools that are based on producer survey data. Accurate NASS data provide improved information for producers' marketing and future planning decisions, can improve crop recommendations by local extension agents, and provide necessary information for local agribusiness planning, and they do improve the accuracy in our farm program payment calculations as well. USDA reports, I'll just point out, are freely provided to the public, which means that both buyers and sellers have access and equal access to that information about the supply and demand of the crop, for example. Such information may come directly through our reports, but they also reach users through news and information sources such as your program. In a market without that free information, large firms might well be able to take advantage and invest in market intelligence that smaller firms and farms would not have available to them. The statistical reliability in our estimates and reports depend on the participation of farmers in our survey work. As participation falls, the ability to refine our estimates to smaller areas, and more targeted areas becomes more difficult. For example, if we look at the quality of national and published state estimates, I'll just point out the national and state estimates have ample survey information. They continue to be highest quality and reliable, but when we start going down to the county level, for example, that may become more difficult.
Well, Dr. Johansson, thanks very much. Great information and insights. Thanks for your time.
No problem. Thanks very much for having me.
We'll return with more on Farmgate right after a few messages.